Good morning. I hope we're all good. Back after a couple of days break, just over the bank holiday, the liquidity in the market thins out, so we see some rather erratic movements, pretty large jumps and spikes here, there, and everywhere. Situations that we don't really want to be involved in. So take some time away, take a step back, come back and take a look after the weekend has finished. So today we expect a fair bit of liquidity to come back into the market from the bank holiday where we've had institutions closed. We also saw non-farm payroll on Friday with very, very positive data for the US coming out surrounding employment rates and employment figures. So that will also likely have quite an impact on how the rest of this week goes within the markets. Looking forward, there's not a great deal of fundamentals that we need to be mindful of. In fact, what we do have, we've seen the majority of already this week. So we've had the Australian interest rates and their rate statement this morning. That wasn't particularly negative, also wasn't particularly positive either, in all honesty. It was very mixed in the reviews that we had there. So those will likely have a knock on at some point today. Got FOMAC meeting tomorrow, and then employment figures for the CAD on Friday. But apart from that, it's all pretty smooth sailing. So we should just have a chance for technicals to play a factor going into this week and moving throughout this week. So we shall see what charts we have available and what technical factors we have that we can play from. Now, one thing that has caught my attention is the New Zealand dollar. We have this area through here, this little pocket, using these previous highs and lows. Just need to bring that down slightly. That is of interest to me. So rejection away from this area would likely see us head back towards the upside. The dollar doesn't seem to be very strong, doesn't seem to want to hold the gains that it's been making. So it makes sense for us to look for potential sell-offs surrounding the US dollar today to see what potential positions we might have available to us. Within this region, obviously, we then got down to the 70 whole number. So I think regarding New Zealand dollar at the moment, what we do have is the potential that below the 70 whole number, we definitely have the chance to take a position. Anywhere kind of around about 69.90, we would definitely have the potential for a short position there if the dollar wants to continue with its strength. If it doesn't, then, like I say, the next best thing would be to take a long position. Now, we can take a long from the rejection surrounding this area, but what would be most sensible would be to wait for 70.50 to be taken out. So once 70.50 goes, then we would definitely have the opportunity to take a position from there. We do need to wait for those levels to be taken out, though. There's no point in trading in between them. that's just opening ourselves up to a whole world of hurt. So we will need to wait for those areas to be found and be taken out before entering potential trades, but they do present us with an opportunity, certainly above the lows. So 70-50, 70-60, that kind of area for potential longs back to the upside. 71, and then obviously a breakthrough there puts us back into our previous trading range. Probably likely to see a push to 72.50 then. Pops below the whole number, so below 70, would signal us back into this region, and we're likely to see a push back down towards 69.50 and a potential breakthrough there down to 68. So it's something to be mindful of and cautious of as we move into today. Euro Oz is an odd one. We've had this area down at 154, and this area at 154.50 that we've obviously traded around significantly before. We are now in a position this morning where we're starting to make higher highs and higher lows. Higher high, come back and retest the area, break out the consolidation, push towards the upside. The only real thing at the moment is that we've seen a distinct lack of sellers involved in the market, and that's obviously always a worrying cause, because what we can tend to see there is just getting caught and baited into a potential short. Now the 4 hours looks a little bit better for it, but we still have this support region, this resistance region that we need to be mindful of around the 55 and 54.80 region. This area is obviously something that is of a bit of concern to us. We need to be very mindful of this zone just as we move into the week. We're seeing a lot of fresh liquidity come into the market. Today might as well be a Monday. We're seeing a lot of fresh trades come in, and those things are something that we do need to be extremely mindful of as we look to move into the week ahead. I think regarding long positions, I don't know that I'm particularly comfortable taking a long until the previous highs at 55.50 have been taken out, or the lows at 54 are taken out for the potential short. I think regarding a long position at the moment, we've obviously got this area. Just want to jump out to the daily time frame just to have a bit of better understanding. You can almost like, if you look through here, you can see that between obviously like 56, 50, 55, 50, you've got kind of a little pocket there. That's something that we need to be extremely mindful of. I just don't know that there's a position there until 55, 50 is taken out. But then again, you can look at it on the basis that sorry, I just want to reposition this again. We can look at it on the basis that above 55 would likely see 55, 50 found. So we have potential opportunities and potential options all the way through this. I think above kind of 55.20 would potentially look to take a long position, targeting 55, 56 even, or below 54 would obviously present us with a potential opportunity also, so below 154. I think they're our best bets as things stand for potential positions. Dollar Swiss, obviously the dollar weakened off yesterday as a result of some fundamentals, but the rate at which that's happened seems to be unreal. It doesn't seem to make an over amount of sense on how quickly the dollar weakened off. Now we have managed to pop back above 93.80 and establish some back into this support region, but we're crashing back through that this morning. If we obviously take out the lows, we can just run a quick box through here and understand that we've got these lows through here that we need to be mindful of. If we take out those lows at 93.50, then obviously we have the potential to short it from there, 93.50 back down to kind of 92.80, then down into 92, the whole number. So we definitely have potential positions here, but we do need to be extremely mindful of this area and of the support region that we can potentially find at 93.50, or obviously breaking above this area as things stand at the moment. So trades kind of around above 85, 90 would potentially see us push on. There's not very big targets though, unless this little range region between 93.80 and 94.30 is taken out. Until that range is taken out, there's not particularly massive trades there. We do need to just be a little bit mindful of how we progress through that. But like I say, we're in a situation now where the pair could go either way. There's no real defining trend, but what we are seeing is that the potential to break through this potential head and shoulders pattern could lead us into short plays for the dollar for the foreseeable future. It just seems mad that we can have such positive fundamentals out surrounding the US dollar and then see it crash off. But we trade what we're given, we trade what we see, and shorts below 93.50 make all the sense in the world at this point in time. Euro US dollar. Euro dollar looked as if we were going to get that short break this morning. We had seen some sustained push to the downside, a new swing form, but that failure to break the lows, and now we're obviously looking to break the previous highs, would lead us into believing that we're likely to see a return to 1880 now. Now, a return to 1880 is all well and good, but again, it doesn't come without its trials. We've got this area that we need to be mindful of around the 50 region that can potentially cause us some headaches. So anywhere between 1820, 1850 is a bit of a no man's land right now, just something that we need to be mindful of. Above 1850, obviously the 1880 level is 100% reachable. And then obviously back towards 120.20 and the previous lows that we have seen through here. So we could be potentially seeing a trend change in Euro US dollar, and that the downside may have run its course and we can look towards upside movement and momentum. But it's important not to get too carried into that just yet, and allow obviously us to get through and break through the regions that we've highlighted here around the 20 level. So there's definitely potential in the position, but also something that we need to be very, very mindful of as we move into the rest of the week. Pound CAD. The pound has weakened off this morning. We've just seen pound New Zealand have a little fight back, which is similar to what we saw obviously surrounding New Zealand US dollar. We saw the New Zealand dollar, the New Zealand dollar weaken off. And if we take a look quickly at pound New Zealand, we can see a similar situation where we saw the New Zealand dollar weaken. If we just pull our ranges back across, we can see that they're very much still relevant at the moment. Range low, we rejected, it came back to the highs. If we crash back below and into 96.80, then obviously it might be prudent for us to look to take a potential short position. Until that happens, obviously shorts aren't something that we need to focus on. Longs above 98 are where attention is likely to go. Anything above kind of 97, 80, I would imagine that 98 is found. And then obviously from there, we see how we fare. Pound yen is another one. Pound yen, as things stand at the moment, obviously we saw that break and continued push and momentum to the upside. We broke through 52.20 and saw nothing but upside pressure from there. What we are mindful of now is obviously this push away and knowing that we're coming very, very close to our upside target of 53.80. And that pushes away from 53.80 would likely lead us back into a push to the downside. Probably somewhere around about 151 would make a lot of sense to see pushes to there. Above 53.80, we need to go into the daily time frame because it's not going to allow us to go any higher. But we're going to push into previous highs of 156.50. So we have a lot of potential surrounding the pound as we move into this week. Definitely something to be mindful of and to keep an eye on 100%. So yeah, anywhere above kind of 154 for pound yen would certainly give us momentum into 156. And likewise, anywhere around breaks below the lows, just drop back down into the 4-hour time frame. Anywhere with breaks below previous highs and into this lows, anywhere below kind of 52.50, 52.20 would likely see us move into short positions and an area to short away from there. Pound CAD. Like I said, we saw the pound have a little resurgence just now, and that seems to have run its course. We're looking at coming back to the downside. Until 73.50 is taken out, then I don't think we have much legs for potential short positions just yet. But once that area goes, then there's certainly opportunity to short pound CAD below 73.50. Long positions obviously is something that we do need to be very mindful of, but again, I would wait for 74.50 to be taken out now. And when we know that we've got this support region at 74.80, there really is no point in getting involved in that until those levels are taken out. But definitely have the potential for buy positions above 74.80. Gold, we've just seen a sell-off from the highs at 1740. Obviously, anything above 1740 is likely to lead into long positions. Euro CAD, anything below 147.80 would lead to shorts. However, obviously, as things stand at the moment, that's not likely to be something that we're looking at. We seem far too distant between that kind of 147.80 region and where price is now, and where obviously we're starting to see price head towards. I think now that we're back above 48.80, I think the most likely scenario is that we head somewhere towards 148.90. With regards to taking potential positions and potential long positions, I'm not convinced that I'm happy to do so until that area is taken out. So I would imagine above 149 149 is likely to need to go before I look to take long positions on the pair as things stand at the moment. One thing I did want to have a quick look through was dollar CAD. Obviously, we see the CAD gain a bit of strength this morning, and we're seeing the dollar weaken off. So we can already see that without needing to look at anything, we've got this area at 125 that we need to break through in order to look for potential downside positions. If we can get below 125, then we definitely have short plays. If obviously we can get below or above, should I say, somewhere around 25.60, then we may see a run to the upside. But it's whether or not you want to take the 20 pip risk or just wait for 26 to be taken out with regards to that pair. But yeah, I hope everyone has a decent day. I hope everyone's had a decent bank holiday. Like I say, we're back into some normality, so let's see where we go from here.